Hello, Yasar. Welcome to our weekly market notes program prepared with the contributions and research of Atolye. Don't forget to subscribe to our channel and like our videos to stay up to date with the markets. This week, once again, we experienced quite eventful days in the markets. In particular, there are some noteworthy developments on the commodities and cryptocurrency fronts. We will examine these in detail for you. Of course, we'll also take a look at Borsa Istanbul and the US markets. If you're ready, shall we get started right away, Selin?
Let's start, Burak. In particular, we saw that some of the levels we discussed in previous weeks were tested this week. It seems once again how important it is to closely follow the markets.
Then let's kick things off with gold. Previously, there were recommendations to take profit and wait when it came to gold. Afterwards, new buying levels were discussed. What happened on that front? Did the targets hold?
Yes, actually, we went through an interesting process with gold. If you remember, around April 24th, we recommended taking some profits and staying out of the market for a while. As alternatives, there were options to switch to silver or to wait in less risky money market funds. In other words, it was anticipated that the market would move sideways for a while. After that, there was the 3,400 level we were monitoring. When that level was broken to the upside, we saw that a buy position was recommended again around August 29th or 30th. That's why we always say regular monitoring is important, and with this buy recommendation, we set the target at 3,778. This was a resistance level identified through technical analysis. So what happened? The price reached this target exactly, and interestingly, for 4 consecutive trading days, it couldn't break above this level. It was like hitting a wall, really.
So this was a very clear example of a technical resistance working. So what should gold investors do now? Should they sell at this level, wait, or is this a good spot for a new purchase?
The general consensus right now is to hold. So if you have a gold position, don't rush to sell. Why? Because this 3,778 level. If it breaks above this level strongly, then new and higher targets will start to be discussed. However, on the other hand, we think it's still too early for a new purchase. First, we need to see daily or even weekly closes above this critical 3,778 level. In other words, we need to be convinced that the price has truly surpassed this level and is staying there. That's when new purchases may become safer.
So we're not in a hurry to sell, and we're waiting for confirmation before buying. So, is it reasonable at this stage to exit gold and switch to another instrument? You said except for silver, right?
Yes. Except for silver, it's hard to give a clear recommendation on this matter. Will gold perform better? Or will another commodity? Or is it the indices? It's not really possible to know this in advance. But the situation with silver is a bit different and more volatile.
Yes, honestly, silver is what caught my attention the most this week too. It seems like we've seen much sharper moves compared to gold. What's the situation there?
There's definitely a much more exciting picture in silver. In our previous analyses, we mentioned that we were approaching our interim target at the $45 level and that we no longer recommended new purchases at these levels. Now the levels being discussed are much more ambitious. The previous peak was 49.81. Let's just call it 50 for simplicity. And in fact, there's even talk of a potential range between $55 and $56. But let me emphasize this. This is an incredibly critical region.
Why is it so critical? Can you elaborate on that a bit?
Of course. For that, we need to take a journey back to 2011. At that time, after silver surpassed the $40 level and turned it into support, a buying frenzy broke out in the market. In just 8 trading days, it gained about 24% and reached that famous $49.81 peak on April 25, 2011. An incredible rally. But the dramatic part starts after this. In just 15 trading days after hitting the peak, that is, in about 3 weeks, silver not only gave back all those gains, it experienced a terrifying drop of over 30% from the peak level. Extremely sharp. That's why silver is called the devil's metal in the market. Its volatility, in other words, its price fluctuations, are extremely high, And because of such sharp movements, it's considered susceptible to manipulation.
A truly striking example. So, is there a risk that a similar scenario could happen again now? In other words, could history repeat itself with silver?
This possibility is definitely on the table. The current pause we're seeing around $43 is being compared by some analysts to the pause after $40 in 2011, just before that last crazy rally. So maybe in the next week or 10 days, we could see one last sharp upward move. There is such potential. However, as we approach the $49 to $50 range, the risk increases exponentially. Could it make a move from that level towards 55? Technically, yes, it's possible. But there is absolutely no guarantee of this, and a possible reversal could be very, very sharp, just like in 2011.
So, what should be the clear advice for silver investors then? How should one act in such a risky environment?
For those who already hold silver positions, the recommendation is still to hold. However, their fingers should be on the sell button. In other words, they need to be very careful and alert for profit-taking. As for new purchases, we absolutely do not recommend it. The risk level is now extremely high. If you're wondering, should I buy? Am I missing out on an opportunity? The answer is clear. Don't buy. If you've missed this rally, don't be upset. It might actually make more sense to turn to other markets, for example, to indices like the Nasdaq, which we'll discuss shortly, and which present a more positive outlook. Getting into silver at these levels is definitely not suitable, especially for investors who can't follow the market moment by moment, like a busy doctor or engineer. It requires very close monitoring and quick decision-making.
I understand. So we can say that alarm bells are ringing for risk in silver. Well, speaking of risk, let's also take a look at the cryptocurrency market. There too, we usually see high risk and volatility. What's the latest situation?
Unfortunately, the outlook on the crypto side is not very promising. As we've mentioned in our previous broadcasts, we've generally been seeing sell signals and have advised caution. This situation hasn't changed much this week either. In fact, we made an interesting observation. At the beginning of the week, while global market liquidity conditions weren't too bad, in other words, while there was money in the market, cryptocurrencies weren't really able to benefit from this in a positive way. Frankly, this raises the question of whether some big players use this liquidity in the market as a selling opportunity. When we look at the technical side, we can clearly see that the total market cap indicator, which shows the total value of the entire cryptocurrency market, has turned bearish, and that important support levels have been broken to the downside. This is a negative signal in terms of overall market health.
So, what's the situation with the major coins, namely Bitcoin and Ethereum? Is there any divergence specific to them, or is the general decline inevitable?
Unfortunately, in Bitcoin as well, the sell signal has been confirmed in parallel with the overall market, and important support levels have been broken. The most critical resistance level to watch right now is around $110,000. It seems risky to make new purchases before this level is surpassed. When we look at Ethereum, the situation is even weaker than Bitcoin. There, the sell signal had already come earlier. To consider a new buy position in Ethereum, we need to see closes above the $4,115 level. On the downside, the nearest supports are at $3,900 and, below that, at $3,550. If these levels are broken, the decline could accelerate.
Understood. So, what's the situation with XRP?
XRP is also one of the coins that has been giving a sell signal for a long time. There as well, to consider a new buy, we need to wait for the $2.80 level to be broken to the upside. The nearest support is at $2.72.
So in summary, there is a general weakness prevailing in cryptocurrencies, and the analyses indicate that it's best to stay on the sidelines for now. At this point, the importance of stop-loss orders, or loss-cutting orders, increases even more, right?
Absolutely. This is a very important point. By its very nature, the crypto market is extremely volatile and carries high risk. Yes, it's possible to make very large profits. For example, we recommended XRP when it was around 70 cents, and now it's at about $2.70. so we're talking about a significant profit. But in the same way, losses can also be very sharp and fast. That's why using a stop loss is almost like having insurance. Automatically closing your position when it reaches a predetermined loss level is much healthier than making emotional decisions and stubbornly holding on to a losing trade. By cutting your losses, you might have the chance to buy again at even lower levels later and chase new opportunities. For now, we may not recommend aggressive stop losses in the US stock markets, but the crypto market is a completely different arena with its own rules, where you need to be much more careful.
That was very clear. Thank you. Now let's turn our focus a bit to the domestic market. What's happening in the Borsa Istanbul BIST 100 index? It seemed like things were a bit calmer last week. Has there been any movement this week?
Yes, last week the market was a bit more flat and indecisive. But this week we've observed some activity. One of the main reasons behind this is the growing expectation in the market. The prevailing thought is that the Central Bank of the Republic of Turkey will insist on early interest rate cuts. Interestingly, the market actually knows that the inflation targets won't be met not just for 2025, but even for 2026. This isn't a secret. Despite this, there is still a prevailing expectation that the central bank will continue with interest rate cuts. From a theoretical perspective, this is a positive factor for the stock market. Because when interest rates fall, money looking for alternative returns might turn to the stock market, right?
Sell in the short term. But what about the medium term?
Unfortunately, there is a catch, and it's a significant one. The uncertainty created by large domestic or foreign funds in the market still persists. It's impossible to predict when these players will start buying or when they will make a sharp sell-off. That's why, from time to time, we can encounter sudden and sharp waves of selling in the index. When we look at the technical indicators, we also see traces of this uncertainty. For example, on the 2-hour charts, we've observed that the price has fallen below key moving averages. Additionally, some technical indicators, such as the super trend, which is a volatility-based indicator showing the direction and strength of the trend, have generated sell signals in the short term.
It sounds positive, but usually in such cases, there's a catch. Is there a catch to this?
When we look at the medium term, the 11,093 level on the 4-hour chart is a very critical threshold. If the BIST 100 index closes below this level for a day, this will mean a second and even stronger sell signal. The first signal has already appeared on the short-term charts. I think it would be beneficial for investors to be cautious and take this technical outlook into consideration.
So, for Borsa Istanbul, we have both a positive expectation, an interest rate cut, and at the same time, serious uncertainty, major players, and technical sell signals all on the table. Can we call this a somewhat abnormal situation?
Absolutely. Abnormal or complex would be a good way to describe it. The market is currently on a bit of a knife edge. If the selling continues, the index could pull back even further. Or on the contrary, at a completely unexpected moment, a big buyer, a so-called whale in market terms, could enter the market and rapidly push the index up with large purchases. That's why investors trading on BIST 100 need to take this high level of uncertainty into account.
Understood. So, shall we move on to a place where things are a bit calmer? How are the US markets looking? What is the latest situation in the Dow Jones S&P 500 and especially the tech-heavy Nasdaq index? Are things going more smoothly over there?
At the moment, we consider the US markets to be a more comfortable and positive region. For example, after a brief 2-day decline at the start of the week, the Dow Jones index resumed its upward trend right where it left off. Similarly, the S&P 500 index also recovered quickly after a 3-day pullback. In fact, here's an interesting note. The excessive reactions on social media and some financial platforms to this 3-day decline, which was actually quite limited, showed just how high expectations are in the market. In other words, investors are almost optimistic as if there will never be a downturn. This actually indicates, on the one hand, that risk appetite is still strong.
especially on the Nasdaq side. You mentioned some formations in our previous analyses. I think there was that wedge formation. Did your expectations come true there?
Yes, the technical outlook on the Nasdaq side is progressing quite positively. In our previous broadcasts, we talked about a wedge formation created by the price tightening. This is a kind of triangle formation, and usually sharp moves are expected in the direction of the breakout. We had mentioned that there could be an upward breakout and then a pullback of the index towards the broken formation line. That prediction came true exactly. The index broke the wedge upwards, then came back and tested this broken line. In other words, it acted as support, and from there, it started to rise strongly again. Technically, this is quite a positive signal. If this upward movement is confirmed and continues in the coming days, we can expect buying to persist in the US stock markets in general and new highs to be targeted. Overall, our outlook on the US markets is positive. Of course, there will be profit-taking and pullbacks from time to time. For example, possible declines in the Nasdaq down to the 23,500 level would not surprise us. However, as long as the trend continues, we believe such declines could present new buying opportunities. We have seen that many commentators and funds who failed to take positions in time and have been calling every rise a peak and a selling opportunity for months were mistaken.
Great. Then, if you like, let's do a general recap. What were the standout topics from our market notes this week? Shall we give a brief summary?
Of course. On the MTI side, the 3,788 level is critical for gold. No new purchases are recommended unless this level is surpassed. The advice for existing positions is to hold. As for silver, the risks have increased significantly. As the $49 to $50 range approaches, one should be very cautious. New purchases are definitely not recommended. Be ready to take profits on existing positions. The overall sentiment in cryptocurrencies is negative, sell signals are dominant, and key supports have been broken. In Bitcoin, $110,000, and in Ethereum, $4,115, new purchases are risky unless these levels are surpassed. Using stop-loss is of vital importance in this market. Let's emphasize this once again. On the Borsa Istanbul or BIST 100 side, although the interest rate cut expected from the central bank is theoretically positive, the market is complex and risky due to the uncertainty among major players and technical sell signals. The 1,100 to 1,093 level is a critical support. And finally, the US markets currently have the most positive outlook. The upward trend continues in the Dow, S&P, and especially the Nasdaq, and pullbacks can be seen as buying opportunities. That was a very
comprehensive summary, thank you. After discussing the markets, you usually have a thought-provoking note for investors at the end. What's on your mind this week?
Yes, this week I came across a wise saying about investment psychology, and I'd like to share it. It says, in the journey of investing, someone who blames others hasn't even started the journey yet. Someone who blames themselves has only made it halfway. The person who doesn't blame anyone, but simply asks why it happened and learns from the outcomes, is the one who has reached their goal. I think this perspective is especially valuable in markets like silver or crypto, where the ups and downs are sharp and losses can occur. I believe that learning from mistakes and moving forward with rational analysis instead of emotional reactions is the key to long-term success.
This was truly a wonderful reminder that deserves some thought. With these valuable thoughts, we've come to the end of our weekly analysis. Wishing you a profitable week and see you next week.